Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broad emerging markets with members of Wisdom Tree and other industry leaders. Hi, this is Liqian Ren, December 11th, 2023. Welcome to China of Tomorrow. This week, I'm going to quickly touch on China's very low headline inflation. It's November PMI survey. There are two surveys, the state survey versus the private survey. And on a little bit on, which plenary meeting on economic policy going to be held and when, what's to expect. And then a little bit on Taiwan if we have time. But first, a little bit on the headline CPI inflation. The headline number is negative. If you follow me on Twitter, I have said this many times that China is more likely to go with a policy of lower inflation instead of devaluating the currency, which could, increase a little bit of inflation. But for China, it has a goal of making sure the currency is stable. So I think currently, if you look at its economic policy, the trade-off they're making is significant lower inflation, which is a reflection of a very low demand. In terms of PMI, it also points to lack of demand and a very cool economy. There are two surveys. The state has a PMI survey, and then the private data provider, Caixin, also has a survey. Usually, I know most people are very skeptical of Chinese state data, but in this case, actually, historically also, the state survey has a broader sample, and from the past data, it seemed to show that state survey is generally a little bit closer to the situation than the private survey, even though both of them are very close. But this time, the divergence were a little bit bigger than usual. I think I will continue going with the state survey data, which is more negative actually on the economy than the private survey. Obviously, could be that the state is surveying, more industrial kind of cities that might be a little bit off, but we'll see. In terms of, there are a lot of questions on when will some plenum policy meetings be held, what's likely to predict. Actually, in the next couple of days, we will likely see more information. There are a lot of speculations. First, I'm not an expert in this area. The framework that I use is that I personally, maybe because I don't know enough, I think China's economy now is 50% plus private economy. So those policy meetings, it's important clearly, but I don't think they are as important as before. I think the economy has its own set of constraints and its own motion now. I think it's important to think about China's economy more as a cold-hearted, economist or financial economist to think, for example, like housing, because the expectation of housing price was always up, and now the expectation is shifting, and the run-up of housing price was so much that now the decrease of housing is almost, very kind of expected. So that's why, since I think very early last year and end of last year, I've always been pretty negative on China's housing market. And this is really not based on the government's policy, directive. Is really based on a fundamental, human behavior. If you see housing can deliver 15-20% a year, people put money in housing. But now the expectation has shifted, then people don't put money in housing. I think to understand this, you don't need to, put this and then say because China is a communist country or because the political is such that, you will have, I think for this kind of housing situation in any other country,
unless, like US, which is very unique. In US, it has its own dollar reserve. It has a lot of monetary and fiscal tools that other countries do not have. I think a lot of discussions on China right now is not I would say detour too much, because many people use US framework to analyze China, and you cannot really do that, because US is just fundamentally different. Many of the economists, they might be trained in the US model to think about the monetary policy, but if you look at Japan or Europe, you see that the same monetary response, a lot of research is based on US situation. It's not necessarily the same kind of effect you will get outside the US. And same for China. So I think that point is underappreciated in China. So again, the headline inflation is very low, partly driven by food. If you exclude food, China's economy year-over-year inflation is about 0.4% positive. That's still low, but not as low as the headline. And I think it will continue for a while. In terms of economic policies, next year, the government's already said next year's goal is to strive for progress, but the number one priority is still to stabilize. And to stabilize China's economy, it's still going to require quite some fiscal and monetary stimulus to stabilize when you have such a big housing market bubble burst. So I think the framework that I've laid it out this year continues to work for next year. On the other hand, the government now is probably a little bit more aware or more realizing that some of the physical and monetary stimulus it can add a little bit more fire without bringing significant inflation. I think in the beginning, maybe beginning of last year, the government was, kind of worried. Wow, if you have too much stimulus, you can worry about too much inflation, because that was a U.S. experience. Again, I think when one analyzes China's economy, one really have to keep these 2 points. One is China's economy is now more than 50% private. Even though it's a state-controlled economy, the winds and the motions of the economy needs to think about it from much more driven by its own economic and financial rules. And the second thing is that a lot of policies that most of us who are trained in US may not work outside the US. I think to have these two in mind, and then add on China's particulars of the state capitalism, some of those constraints, that's a good framework to think about China's economy. On Taiwan, I think the presidential election is 1 year away. We did an episode. The framework is still a good framework. You have two leading parties. They are probably within 5% of the difference. And then you have another party which has about 15% of the help. So the third party, whether the third party candidate will at the last minute move toward one of the parties, that still remains to be seen. And that is I think one of the I wouldn't say drawback, but one of the feature of Taiwan's political setup, that it does not have a runoff system, which introduced significant uncertainty. Particularly in Taiwan, the financial incentive for smaller parties is pretty high. If the smaller party can gather more than 5% of the vote, they get significant money from the government. That would, encourage smaller parties. That adds to the uncertainty of the political situation. So that is a very big feature of Taiwan's election. And I think for now, people just have to sit tight and wait. I think most of the drama is going to happen in the last 2 weeks. So after January 1st, after the holidays, we can come back, and I will continue to bring my views. And you can also follow me on Twitter or go to our website and listen to past episodes and read some of our blogs.